Hey, what's going on, guys? In today's video, I'm going to be answering the common question of how much money do you really need to start investing or trading in the stock market? A lot of people might think that it's a complete waste of time if you don't have X amount of dollars, but I think there's a much better way to think about this, and I'm going to explain my thought process throughout this video. So I'm going to split this video up into 3 different parts, where first I'll answer the question of how much money you need to start investing, and then I'll go over a good mindset that I think every beginner investor should have. And then at the end, I will go over how much money you could expect to make if you want to be more of an active trader or trade in the short term, just depending on how much money you start out with. So hopefully by the end of the video, you will have a new perspective and a better idea of how much money it is that you're going to need to start investing. But before we get into it, hit that subscribe button to join the team and drop a like on this video if you want to see more content like this. So the first thing that you should consider when deciding whether or not it's a good time to start investing would be the alternative, or keeping your money in a savings account. There's plenty of banks out there that offer a wide variety of savings accounts, but let's say that you just opened up an account with Bank of America. This is how much money you would make by just letting it sit in an account like this. The standard interest rate for an account with less than and over $2,500 is 0.01, and then if you work all the way up to their platinum rate, the return is only still 0.05%. And these kind of returns are a complete joke. A 0.01 APY means that if you had $1,000 in a savings account, you'd be earning 10 cents per year on that $1,000. So after 1 year, you'd have $1,000.10, and this is essentially how your returns would look over the years. So keeping all your money in a savings account is literally like keeping it in a jail cell, because first of all, you're not making any money by leaving it there. It's literally earning pretty much zero interest. And second of all, you're actually losing money just because of all the other places that you could keep that cash, and then you'd be making a much greater return. So now let's compare this to the most basic investment that anybody can make in the stock market. All right, so here's a compound interest calculator that you can use as a reference just to give you an idea of how much your investments would make over time using the power of compound interest. And if you guys want to check something like this out at home, all you have to do is go into Google and search for compound interest calculator. This one is from NerdWallet, but they all serve the same purpose. So let's go down here and plug in for your initial deposit. Say you had $500 to start investing. And then for your monthly contributions, and this is going to be the biggest part and the biggest piece of this puzzle, and you guys will notice that throughout this example. But let's say that you wanted to contribute $50 a week. So let's plug in $200 a month. And then for your investment time span, we'll just put it up to 40. This is a pretty, basic number to use, just because most people do start investing around 20 years old, and then 40 years down the line when they're looking to retire. This will show you kind of just how much money you should have before then. And for the estimated rate of return, we'll go in and plug in 8%, because this is the average return for the S&P 500. It's a pretty, simple return. 8% is nothing crazy. You can definitely make more than this if you are investing in individual stocks or just different index funds that don't track the S&P. But for this example, we'll use 8. So when we plug that in, you can see, I'll actually switch this over to annual. So you have $632,000. And you might not think that this is a ton of money for 40 years worth of investing, but you do have to remember you started with $500 and you only contributed $50 a week. So now let's go in and plug in some different numbers. Say that you did $100 a week. Now you can see there's $1.2 million, or if you wanted to even double that, imagine putting $800 or $800 a month. You have 2.4, and you guys can play around with this at home, but I think the main thing that you should pay attention to and get out of this example is down here. You can see the principal, which is in blue, and this is how much money that you put in, that you contributed over time over this 40 years. And then this green is the interest, and that just shows this compound interest and how your money is making money every single year. So that is where the majority of this $2.5 million comes from, is from this compound interest. So that's why it's so important to start investing no matter how much money you have. We literally started with $500, so anybody can start doing this, and it will definitely pay off in the long run. So hopefully that example could shed some light on the true potential of compound interest, and the main takeaway from that example is that it's not about how much money you start off with, it's about how much you contribute and how consistent you are over the years. And I know long-term investing like this isn't really something that they teach in school, and the media can make the stock market look like this crazy place where people just come in and lose their money every single day. But if you are investing for the long term, that really just isn't the case. And I actually made an entire video going through my top 6 ETFs to buy for 2021, and some of those had a much larger return than 8%. So if you guys want to check that video out, I'll link it somewhere above and also put a link down in the description. So hopefully that answered the question of how much money you need to start investing. We started with $500 and you guys saw how the returns were massive. So anybody out there who's telling you that you need $10,000 or whatever it is to start investing is just completely lying. And the worst part about waiting until you hit a certain dollar amount or saving until you hit $10,000 is that you're saving that money. So you're putting it aside, you're putting it in a bank account, wherever it's going, and you're not making any money during that time. So it would make a lot more sense to just start investing with whatever you have, and then you'd reach your $10,000 mark or whatever your goal is much quicker. But anyways, there's a quick breakdown of some numbers, but now let's get into a good mindset that any beginner investor should have. So first, your number one priority as a new investor is to not lose money and to protect the money that you have and then make money later. Even though this is tough at first because you want to jump right in and start making money, you probably see all these online gurus on Instagram flexing how much money they make every single day when they're trading, but you have to just remember that you can't lose the money that you have first because you're never going to be able to make any money on top of that. I see so many people come into the market, including myself back when I first started, with the mindset of, well, I only have a couple $100, so I might as well make some risky trades or investments to try to make as much money as I can just off that couple $100. And then you can justify it by saying something like, it's only $300. If I lose it, it's not a big deal. I can always make more money down the line. But in reality, these are the people that should not be taking nearly any risk at all. Imagine if you put $300 into a bank and then you woke up the next morning and that $300 was now $150. For some reason, when people lose money in the market, it doesn't have the same effect and it doesn't seem real. It's kind of like the casino chip example. Like if you just have a bunch of chips in the casino, it doesn't seem like real money, but it is real money. And when you lose that money, there's no guarantee that it's going to come back, and that's the same thing in the stock market. So that's kind of the mindset you should have. The less money you have, the less risk you should be taking. The people who have more money can afford to have losses, so these are the people that can take bigger risk, but we often see this reversed at times. All right, so now let's talk a little bit about how much money people make if they are actively trading and trading in the short term rather than just holding stocks for a few years. You probably see traders online making tons of money on a daily basis, and you might be wondering how much money it takes up front to see thousands of dollars worth of gains every day. And the short answer is a lot. I can guarantee that someone who makes $10,000 in one day is not trading with $5,000. They're probably trading with a few $100,000, or if not even a few $1 million. Just from personal experience, if you are day trading, just stocks, no options, an average return to look for would be like 1 to 3% on a trade. And if you're swing trading, an average return would probably be like 5 to 10%. So you can plug that into how much money you put into a single position. But say you have $1,000 in a stock and then you sell it a few days later for a 10% gain, you'd make $100. And a 10% return on a stock in just a few days is definitely a great return, and it's not something that you see all the time. Yes, you can also mix in some 20, 30% gains, especially if you're buying and selling stocks around different catalysts like earnings and stuff like that, but it's not something that you should expect every single time. And yes, people do trade options, and I'm sure a lot of these gains that you see people making online are from options because it's just a way for them to lever up their account, but it's also a lot riskier. You put $1,000 into an option and that stock's price went up 10% in 2 days. You could very well see a 100% return on that option, but if it went against you and say went down 10%, you could very easily lose pretty much all of that option. So this really isn't something you should be doing with a smaller account size. I'd focus on just trying to get these, 3 to 5 or 5 to 10% gains, because those do add up over time and they take a lot less risk up front. So if you're trading with $500 per position, don't look to make, $300 or $400 on that position. Try to make, say, 25 or 5%. And if you see someone who makes $10,000 in a single day on a stock, they could very well have $200,000 in that position. So that 5% gain for them is a lot different for a 5% gain for you. This is definitely a game where you do need money to make a lot of money, but the only way that you're ever going to be in the position to do so is by starting early and playing the long game. All right, so that's it for today, guys. Please leave a thumbs up if you got any value throughout that video. And if you're new here, I post videos every week about investing and trading. So hit that subscribe button if you want to see more videos like this, and I will see you guys in a couple days. Peace.